In my last video, I took business lessons from Amazon's Jeff Bezos and paralleled it to our business of trading. As a reminder, he spoke about experiments and said, if you experiment, there will be failure. He rightly pointed out, if you know an experiment is not going to fail, it's not an experiment. In other words, there is an element of risk. The rewards, however, can be long-tailed. If you think about it, every trade we do is an experiment. There is a potential for failure. There are no guarantees. Admitting your failures is probably one of the hardest things we as retail traders must face. Think about it. There are people out there listening to this video who are not used to failing at the frequency of a trader. If in high school or college I failed 40% of my tests, I would not be here with you now. But in trading, if you can win 60% and lose 40% and attack the winners and limit the losses, you are going to do pretty well. In this video, I'll explore the failures or mistakes we make as traders and how we can turn those failures into successes without going crazy. I will often read something and save it. My dad has a habit of cutting out articles from magazines or newspapers and shoving it in a folder. One folder leads to another, which leads to another. His desk wasn't the neatest of places. For me, I use Microsoft OneNote. I will shove an article that interests me and clog up my hard drive instead of cluttering my desk. Coming off my recent video about experimenting and failing, my wandering on OneNote led me to an article from an old Psychology Today. It was titled, How Mistakes Can Make You Smarter. In the article, Dr. Kelly McGonigal said, nobody wants to make mistakes, but how you react to them makes a big difference in whether you learn from them. She cited 2 studies that looked at what happened in people's brains as they make mistakes or fail. The studies concluded that there are 2 typical brain responses to failure. One looks like a wake-up call. The brain recognizes the failure and treats it like a problem that needs a solution. It wants to stop the mistake, not repeat it. The brain wants to learn from it. The second brain response from the studies is a shutting down. The failure is a threat. It is demeaning. To escape the bad vibes from the failure, the brain chooses to not think about the mistake, to ignore it. People with this response want positive feedback. There is little or no desire to learn from the failure. So we know traders fail. Every trade is an experiment, and by definition, experiments don't have a known certainty. There are losses and there are failures. If you think about your losses and your responses to them, what is your response? 1. Do you humbly strive to understand why you failed and try to condition yourself to not do it again? Or 2. Do you look at the losing trades as a threat, as an affront to your intelligence? Maybe you lay blame for your loss on something or someone other than yourself. Let's look at those responses. So, do I humbly strive to understand why I failed and learn from it? What I know is trading is a business that never gets to black or white. What I mean by that is if you are an engineer, you may have really complex formulas that calculate the stress, let's say, on a beam for a bridge. Maybe you run experiments in a simulator and the beam cracks. You make a change and you run it again and it cracks again. You do 100 experiments until you have total success. You build a bridge to those specifications from those experiments. In trading, I can run a trading experiment and it works like a charm. And the next time I do the same exact thing, the experiment fails. As many of you already know, my trading experiments are mostly focused on technicals. I look at technicals in a way an engineer might use a complicated math equation that measures the stress of a bridge's beam. Except my formulas are much more simple. I like to use simple 100 and 200 moving averages or trend lines and retracements. They define where I conduct my trading experiments. For example, down here I see the 100 and 200 hour moving average converge with the price. Now, I may also have a dollar bullish bias, a fundamental bias. The Fed is tightening, other countries are not. So I want to search for bullish technical clues. If I can buy a dip in the dollar versus yen, that is good. My experiment or trade is to buy against the moving averages with a stop 10 pips below the 100 bar moving average, the blue line right here. We will assume I take a profit at some multiple of my risk, say 2 to 3 times my risk level. So here I buy, say, 10 pips above the moving average line. My stop is 10 pips below the same line, so I'm risking 20 pips on the trade. The experiment works. The price goes up, I book 40 to 60 pips. The next experiment occurs here. I buy here and risk 10 pips below the 100 bar moving average for a total risk of 20 pips. The price moves higher and again I book another 40 to 60 pip profit. The next trade happens here. In this case I buy here, the price goes down below the moving average line but only falls below the line by 8 pips. I survive the stop and the price moves higher. And again, I book my 40 to 60 pips. I do it here too, and it works again. Then I do it here, and it does not work. I get stopped out. The trading bridge fell down. Now, do I look at the losing trade as a threat or an affront to my hard work and trading intelligence? Do I blame the algos? Do I blame my broker for running my stops? Do I throw my idea of buying against a 100-hour moving average out the window? In other words, do I react negatively to that loss, to that failure, to that mistake? No. Trading is not black and white. As Bezos said, if there is certainty in the outcome, it is not an experiment. There's going to be losses. So what I like to do is think of my trading failures not as failures, but actual successes. I did nothing wrong here. The market, which I humbly respect as bigger and all-knowing, almost godlike, had a different plan for my trade. The market to me is up here, and I am down here. My trades, my experiments have me humbly listening to what the market has to say. And if the market says go lower while I'm saying go higher, I get out. The price action does not lie. One final thought. The all-knowing markets change their moods. The dollar Swiss through here is not really cooperating with the 100 bar moving average, is it? To trade this area as if it were a trending market will lead to a lot of failures, which should be a wake-up call to find the solution to the problem. This ceiling and this floor is the new moving average. Sell high, buy low. The market will tell you that if you are willing to listen. Hey, nobody wants to make mistakes. No one wants losing trades. But what I know is trading is not easy. It's a bunch of experiments, and as a result, there will be failures. But how you react to your mistakes, your failures, your losses will make a big difference on your ultimate success as a trader. Be humble. Search for solutions. Don't grumble. Don't blame. If you like this video, give it a thumbs up. If you didn't like it, feel free to give it a thumbs down. My name is Greg Michalowski. Good fortune with your trading.